Hello, Maverick traders, and welcome out to your weekly currency room. This is Ankit here, and I'll be breaking down this week's price action and most importantly, talk about our upcoming week ahead. Let's get into it. As always, I'll be breaking down this week's price action by looking at broader markets. Then we'll take a look at our currency baskets, take a look at news events, and then we'll talk about some possible status ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis, and here we are seeing quite a movement in the overall markets. I mean, if you start with the equities here, equity breaks out to new highs. So the momentum in the equity markets continue to move higher. Now, there's some key news events that happened this week that really moved the markets. Massive stimulus package out of China. Again, that was a big news, and that really caused the Chinese market to go up by like 18-19%. Now that's a massive move, and we haven't really seen this kind of stimulus since the pandemic. That's really where a lot of the central banks came out and they printed a lot of money, and now we are seeing China starting that because there's a lot of weakness in Chinese market. So again, giving a lot of boost here. So that really helped not only the Chinese market, but we're seeing a lot of that spillover in other markets as well. Now, as far as the central bank goes, we have the Swiss bank that cut rates by 25 basis points. Again, that was already priced in. It wasn't a surprise. And the Swiss bank didn't really weaken much after that. And I'm assuming that they didn't really had a weaker guidance. So overall, it wasn't really a big mover. And then we had the RBA, which made no changes to their policy. In their, this is where they have been a little bit more hawkish. But overall, I think, based on how everybody's cutting the rates, they're probably going to be the last one to sort of make a shift to their policy. But they didn't sound as hawkish in their press conference. But overall, I think, the next step really for central banks is going to be, cutting rates. And we're seeing that pattern happening across the board where, right after the U.S. cut rates, we have so many other central banks that have cut rates. And with the 50 basis cut, now the other central banks are also looking into doing that big of a rate cut as well. So you can see that this is kind of reminds me of 2022. 2022 was a year where, we had the inflation pickup, and there's a lot of movements that took place from the central banks all around the same time. And I think we're kind of doing the same thing here in 2024 as the end of 2024. A lot of central banks are moving right around the same time. Now, in the crypto markets, I must say that they finally looks like there's a strengthening higher. So they are looking a little bit more bullish than they have been. And there have been many times where I would say the crypto should have gone higher, but they did not. Finally, we're seeing a bit more of that strength there. As far as the strength goes, I like the Bitcoin outperformance overall. And we're seeing the other cryptocurrencies catching up as well. Now, let's just take a look at last week's events and see what really is the major news that really affected the markets. And let me just start with the Euro numbers here. This is the European manufacturing and services PMI. Take a look at this one. They're all below 50. Now, anything below 50 is not good for the economy. And we saw that big move in Euro. I mean, we'll talk about Euro when we look at the basket, but finally, Euro's actually started to move quite a bit. And again, this was a bit of a driving factor. Now, we are going to be probably looking at a further breakdown in the Euro, especially if the economy really weakens over here. Remember, they already cut rates in the last meeting. Economy is getting weaker, so we're seeing a bit more relative weakness in the Euro here. Now, outside of that, there's nothing really major. We have two central banks, which is we already discussed. The U.S. data seems to be mixed here. Their consumer confidence was weak. Their unemployment claims hasn't really changed as much. I mean, they're hitting a 4-week low, which again is just telling me that the jobs market's not really deteriorating as much. Because if people are really losing jobs, then the unemployment claims will go higher. But we didn't really see that on Thursday. So that's what's really going on here in the broader market. The PCE price index today, it came out a little lower than expected, and which again I'm not surprised because we are seeing lower oil prices. The rates coming down. This is just going to help the inflation picture quite a bit here. Now let's just jump into our last week review and then take a look at where we are percentage wise. And you can see that there was a nice week adding on to the gains for the S&P 500, 0.5%, Q 0.75, cryptos again doing nicely at 3.51 on the top of like last week. I think we were at about 6% gain. We're seeing gold continues to move higher, and then oil just really turned lower after having some decent days. So overall, really, as far as the market momentum goes, this is a market momentum stays on the upside here. So here's the S&P chart. As you can see that after this massive break, market looks bullish. Although the candlesticks have really narrowed down, we were dealing with some very narrow ranges in the broader markets. But at the same time, we are staying above that resistance level, and it looks like it wants to go higher. So in between, we are going to get some pullbacks. But remember, overall trend remains bullish. And in a bullish trend, we can get some pullbacks. So I think that's really where we are in the broader markets. But I would want to make a note that as we get more and more data out of the US, that's really going to solidify further rate cut expectations or curb those expectations. All that the focus is just going to go on the economic data, which is going to be next week. So watch out for that. Now, let's just jump into percentage changes. And you can see last week, a lot of movement, especially, if we take a look at Aussie and Kiwi, a nice risk-on environment. So that's moving along the lines as far as the correlation goes. But I must say, I want to highlight the yen. I know yen looks like a small mover here, but if you take a look at yen, we had a massive move in the last 24 hours. So Japan had a newly elected prime minister that was announced overnight. And after that, it was just a massive move in the yen. It seems like the Japanese market didn't like the news. So the Nikkei, which is their equity market, is down like 4.5%. We are seeing yen move. A lot of the yen currency pairs move like 2%. Again, that was a massive move because yen was looking pretty weak, and it really turned around, the weakness and turned to strength. So we'll discuss that there as well. We have the euro and the dollar being the weakest currency. And again, I know it's kind of ironic that, we usually see dollar weak, but then not euro being weak as much. But take a look at it. Both the euro and the pound currency pair looks decent over here. So the euro and the USD currency pairs, we are seeing that the pound's not really taking part in it, but pound did pull back as well. Canadian dollar, which again, we talk about, trend score remains weak. Any sort of, reprieve that we get is turning to a sell-off. So not really, not really happening much for the CAD here. And that's just franc, which again does well in a risk-off environment, but then at the same time, it rejected that support level. So it's not really breaking lower. We saw a lot of rejections at some key levels. And that's what we'll discuss that because a lot of the currencies are at some major support levels and that's really where we get a lot of volatility and we turn to push higher. That process might take a little bit longer. Now, let's just take a look at the percentage change in the crypto markets. You can see decent moves across the board. Bitcoin Cash. Here's Ethereum actually done well, 4.73%, and Litecoin 2.33. So I still like Bitcoin, and if I have to go with something that's going to catch up, and that will be the Ethereum. So overall, I must say this week I do like crypto here. Now let's just jump into our market analysis and take a look at where we stand as far as the outlook goes. And you can see that the outlook remains the same. It's a +2. If you take a look at the chart, there's nothing really has changed. We are above the 20. We are above the 50. And like I said, there will be times in between markets would pull back, but overall, those pullbacks likely to be shallow. A lot of times we get these big breakouts and we can get a retest of that prior resistance, which has become the support. So that support is in place. The only time I'll really change that outlook on the market is if it really gives up that support level. As long as it stays above that support level, market is likely to remain bullish. Now, let's take a look at the outside of that. Let's take with the bond yields. And all of you have been following bond yields with me, and you've seen like throughout the year, bond yields have done really a good indicator on correlation between the bond markets and the US dollar. I must say that that correlation kind of breaking up a little bit here, because you can see that the since the announcement of that rate cut, the yields actually have gone up, but the dollar had actually stayed weak or even gotten weaker. So we're seeing the bond yields kind of going one way, but then we're seeing the dollar going the other way. So just want to acknowledge that, as I really love following these correlations. When they do break, that's where you got to take a step back and just follow that price action. Now in the crypto markets, this is why I like it here. Take a look at it. Resistance level breaking out, and once it's cleared this area, you can see the next level of resistance is about here. So it looks like maybe you can have a decent run here, above to that resistance level. Now let's just talk about next week events. So we'll be closing up September and starting up October next week. So we are going to see some events that I think will make a bigger impact, especially on the dollar, and that's going to be all about the US data. So you can see that next week we have USD ISM manufacturing numbers, we got job openings, we got ADP numbers, we got services PMI, and then we got the US employment report. Next week is all about US data. So what's going to happen next week? Well, this data is going to really highly impact the bond yields. It's going to impact the US dollar. And if you're really looking for a further extension, or you're looking for a catalyst, that's really where the catalyst is going to come from. If that data comes up better than expected, I won't be surprised that dollar actually reverses a little bit, just based on the fact that, markets always get ahead of itself. They're expecting another rate cut of 50 basis points. I think last time I checked, it was like 55% chance that they're going to cut 50 basis points in the next meeting. So if that data doesn't support that, if the data comes out better than expected, I think the expectation is going to pair off. So that's where I think it's a two-way street on that one. But as a trader, we always want to be prepared for both case scenario. Outside of that, we have other numbers, like we have Swiss franc CPI. We have some CPI numbers out of the Eurozone. But I think right now, the CPI is not really moving the markets. It's the employment figures that's really moving the markets. So that's what we're going to focus on here. So as we go next week, I think a market could pull back, but the overall trend remain bullish. Again, I think it's all going to come down to the economic data, and we'll be reacting based on that. So it's quite a bit of data every single day. And I think if you're looking for a catalyst, this is a perfect week to look for those setups there. Now, let's just jump into our currency analysis, and let's take a look at cryptos first, and then we'll go into currencies. Like in the crypto world, you can see that now we are seeing the trend and the velocity sort of matching up. So trend score is +2. We're seeing velocity picking up. So it's a similar chart as you take a look at Bitcoin, Bitcoin Cash, which again has a bit more room to run. It's slowly picking up the momentum, but they're all matching up. Usually when these things match up, that's really where we get a bigger move. They're consolidating, breaking out. Same thing with the Litecoin, consolidating, breaking out. So overall, all the cryptos are sort of moving in the same direction. Now, let's just talk about currencies, because there's a lot to discuss as far as the levels go. Now, here we are with the US dollar. One thing you got to notice is that as soon as we get towards these key support and resistance level, that's where we start to see sometimes it's a clean break and sometimes it's just a back and forth. Now, take a look at the price action of the dollar. We did break over here, then we had a nice reversal. And this reversal has really made me think that, hey, maybe that was a false breakout. As you can see that right after that, we got an inside candle here. I would, again, look at the candlestick today. That was also a little bit positive at one point and then negative at one point. So we are seeing this price action, which is definitely a little difficult here. If you're looking to trade on the daily chart, maybe the daily chart probably would be the easier to trade, but if you go on a 4-hour chart, there's a lot of back and forth. So trend is clear. I think it's just the way the dollar's moving. It is trying to show some support here, and that support, I think as we are looking at this level, it did break lower. But we'll take a look at the chart in the past, because we have broken this level. This is a massive level of support, and we have broken that support before. But then it's going to come back right above. So is that going to happen again this time, or is it going to continue falling? Well, time will tell. Now, the yen, take a look at that big reversal. So we had a massive move in the early part of September, and look at that beautiful fall in this last week and a half. Now you can see that we were looking a lot bearish. Look at yesterday's candle. Everything was looking downside. But then look at the velocity chart. We got that news. We had a massive bullish engulfing candle and pretty much staying positive since then. So we definitely are getting this massive reversal in the yen, which I think likely to lead into next week. We'll see if this market digests that news about this election, or is this going to reignite some of that, some of the volatility here in the Japanese yen. But if you just look at from the chart basis, we rejected the support, and at this point, it looks more bullish than bearish to me. But we'll take a look at it. Now, the Swiss franc is another one that rejected some key support level. Take a look at this one. They did cut rates, and each time it looks like it wanted to go lower. And guess what? It did not. It did have some lower shadows, and then here we are back in the range. Now, does this look like a bullish currency pair? No. It just looks like it's moving back and forth within that range. So that's really where we are. Not really looking to short the Swiss franc, but I think there's definitely coming nicer on some rallies on those bull pullbacks. Velocity is picking up, and especially if there's a risk-off movement in the markets. Remember, the dollar is not the one that's acting as a safe haven currency right now. So in those situations, it's going to be the yen and it's going to be the Swiss franc. So always keep that in mind. Now, if you take a look at the euro, and this is why I really like euro as a short. Take a look at that support, and we are right at the support. And the question is it going to break lower here? And we'll take a look at the chart when we look at the currency baskets, but this is another important support level as well. And right now, we had a massive little candlestick right here. This was on a Monday when we had the PMI figures. And then here we are getting another move down. So I'd like euro on the short side going to next week. You can see that velocity is on the downside as well. Now, British pound, on the other hand, you can see that it had a breakout, and now it's just trading within that range. Today's candlestick doesn't look the best. But again, I would be sort of holding back on this pound trade, especially with this big reversals that we saw in the yen. We're going to maybe divert some of our attention to some other currencies. Now, we're looking at the CAD, which again looks pretty bearish to me. You can see that it did rally, started to come off. And again, that was quickly sold off in the last 2 days. So we break the new lows. I know the Bank of Canada is widely expected to cut rates by 50 basis points. So that's just going to keep pressure onto the downside with the Canadian dollar. Now, the only places that's actually looking the best here is the Aussie and the Kiwi. You can see Aussie slowly climbing higher. You can see the measured moves to the upside, and we're seeing the same thing in the Kiwi as well. So as long as the market stays positive, I think the Aussie and Kiwi are likely to stay positive. And as long as the dollar stay weak, this probably stays strong. If there's a reversal, I think that reversal is going to come on the stronger US data if that happens. So watch out for that next week. So as far as the trend score goes, you can see we are clearly on pound, Aussie, and Kiwi to the upside. We're looking at dollar and CAD to the downside. And euro is a newer addition to this one. Now, the yen and the Swiss franc is in the middle. I would take a look at yen for a further sort of follow through. But Swiss franc, I definitely it's more sideways, more range bound. But I definitely do like to buy off the support on that range there because it's clearly not breaking, and we had every reason for it to break this week, and it did not. That just gave me a sign that maybe it could have a bit of a rally towards the upper end of that range. Now, as far as the velocity goes, you can see there's a lot of velocity, especially on a Friday. We have euro, pound, CAD that looks pretty weak. Your dollar pair looks pretty good, weak. And then again, the yen had the massive move that I just showed it to you. So it's an active Friday. But this is where we talk about volatility. These are the volatile periods. And we're definitely seeing that in the markets. So let's just jump into possible trades ahead, and let's take a look at what looks the best here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So as we are in the charts here, let's just take a look at currency baskets first, because take a look at the yen. This massive reversal that came overnight. You can see this thing is so bullish. It's just making a nice little bullish pattern there. It's not even taking a pause. It continues to run. So I feel like that's how the yen has been acting. It was very one way. Because again, you can see how things moved over here and how things moved over here. Once this candle finish, we'll see how this opens up next week and what kind of follow through we get. But for now, it looks pretty bullish here. And on the grand scheme of things, on a daily chart, you can see it's just bouncing off that support here. So again, another rejection. This had almost broken that support overnight, but then another rejection, and now it's back within that range. And again, so is the Swiss franc within that range. The only thing that's broken lower again is the US dollar. And I want to highlight the chart here. Let's go on a weekly chart. You can see that how important of a support level this is. And this is the reason why you're getting a lot of back and forth around this level. So we have broken this level many times before. Let's go on the daily chart. And you can see that, this is a level. We have broken that before over here, and then we had a rally. It did break over here, had a rally. So the question is this about to fall apart, or could it make a reversal? And again, I think for that, I will be looking at those news events next week. And if the data comes out stronger, I will be looking for a reversal in that. If that data comes out weaker, I think then the dollar is going to go down much further. Now, euro. Let's talk about the euro currency basket. And here's a weekly chart. And you can see how important this support level is on this euro here. And we go on a daily chart, and you'll see this is an important level of support. We came back around this level earlier, and then here we are back at this level. And you can see that this thing did pierce through. It's bouncing back a little bit. But if you take a look at the weekly chart, you'll see this thing had a massive run in the last couple of years and has been range bound. But if this give up further losses, I think that's a time to really turn bearish on some of the euro crosses there. And for that, we can take a look at currency pairs like euro Swiss franc. Remember, looking at that divergence there on the daily chart. This thing looks like it wants to break lower here. We got some support over here, but then here we are at the parabolic SAR. And if it breaks below that, definitely looking for further downside risk there. Now, another one that I do like, if you take a look at, if the yen start to strengthen further, euro yen. Look at the weekly or daily candle, like a massive reversal candle here. So this one looks nice as well. I do want to get some short European euro exposure over here. We can also take a look at currency pairs like euro Aussie, especially that's where the momentum is. You can see this thing is moving lower very nicely on the daily chart. It's going to be hitting some support at 161. So the risk to reward doesn't look as good to enter here, but if once we break that 161, probably be a better area. The euro kiwi. This is the one. Let me take a look at that euro kiwi. Again, we got a massive support at about 174. Other one, potential trade, we'll take a look at euro USD. As you can see that the euro USD is kind of doing the same thing because both are down the same amount. And we'll see which side wins first. But this thing is sort of stuck in that range there. Now, we can also take a look at dollar CAD. Again, we're looking at possibilities next week. If the dollar reverses, I do like it against the dollar CAD. We got a support right here at 134. You can see on a 4-hour chart, there was some pickup in activity, but this is, again, we're talking about possible case scenario if the dollar is weak or dollar is strong. Now, if the dollar is weak, take a look at Aussie dollar here. This is at the verge of this, look at that breakout here. So it looks like it's really broken out, and we haven't really broken this level out going back 2023. So this is a major sort of a move that we're getting here. So in that case, bull pullbacks likely to be bought out. But again, we'll look probably look for some base patterns here. Again, dollar currency pairs have been difficult. I mean, take a look at this as a daily chart. You can see this candlesticks. I mean, it really throws you off. Like this reversal candle here, it looked like it wanted to go lower, and the next day it just came up. So there's a lot of back and forth that you just need to understand that that's how the dollar is. And I think that's why it probably worth maybe waiting on the dollar next week when we start to get the data, because we don't want to be getting caught in the wrong side of that trade either. A lot of the bearishness is already there. If there's any sort of change in that direction, dollar could reverse as well. Similar to, what we saw with the yen, when reversals happen, some major reversals can take place in a very short period of time. You can see that all week, this thing was just moving up and up and up. And then here we are, a massive move to the downside. So in conclusion, economic data, again, will be in focus. That's what I will be primarily looking on, especially if you're trading the dollar crosses or you're looking for another extension for the dollar pairs. I think that data is going to be important. And if you're looking to see a reversal, then we need to see that data gets better. If the data stays weaker, we're probably going to have more downside pressure on the USD. Outside of that, watch out the yen. We had a massive move already. We'll look for a continuation there. And then we'll probably take a look at Swiss franc currency pairs as well. So there's definitely a lot of moving parts. So it's very important to trade the right currency. Whatever is moving, you want to trade that. I think next week is going to be all about the USD. So we'll continue watching there. You have a good weekend coming ahead.